Welcome to another episode of Straight Talk on Stocks with Kevin Hurley, managing partner of Hurley Investments LLC, and Jeffrey Dunyan, CEO and owner of Safe Option Strategies. We are just a couple of guys that like to shoot straight with you and tell you about what's going on in the market, why it's going on, and most importantly, what you need to do about it. Straight Talk on Stocks likes to mix in a little bit of politics. We occasionally mix in a little bit of sports, and sometimes we just like to tell you what people are doing that really ticks us off. Thanks for joining us for another episode of Straight Talk on Stocks.
Hey, good morning. How you doing on this Monday morning?
Fantastic. How was your weekend?
It was an amazing weekend. Got some good ice fishing in. Only had one kid fall into the water a little bit, freeze his leg, have to get him warmed up really quick. Never heard a 14-year-old cry so loud.
This is for all the things that we have in common, Kevin. This is, you know this already. This is one of the differences between you and I. Ice fishing, I know there's people out there that love it. I know you're one of them. I personally will never understand it. I just won't. I will never understand the appeal of ice fishing. With one exception. Let me throw this one exception. I know you've told me a couple of times that to get away from everything, to get away from the electronics, no computer, no phone, no clients, no customers, nobody complaining. I recognize that to do that, there's an appeal, but you do that with ice fishing during the winter. I do that on the ski slope. On the days when I ski and I don't take my family, it's for the reasons you're talking about. I'm out there, I'm away from everything. There's other people around me, but as long as they don't ski in front of me and knock me over, I could not care less about them.
6 friends talking about the stock market, eating steaks. We grill right on the ice. Bunch of kids running around, nothing better. With that said,
I know how much you love it.
You surprised on finally we're getting a down day in the market that's really come back quite a bit? What are your thoughts on that?
I don't know. For so long, we've been in a headline-driven market. I got to tell you, I'm surprised when we started the day down. Stocks open, we're instantly 130 points down, but this is on the Dow. But you've only got about half the Dow components that have started trading. Over the next 2 minutes, 3 minutes, when the rest of the Dow components open up, we're down, I think, 225. I think we are close to that. We hit as the low of the day. And then 15 minutes later, President Trump, on his way to something he's going to in New Orleans, I think he's going to go talk to FFA or something, some farmers thing that he's going to go talk to.
Right.
He makes some comments about very optimistic on China trade talks, that the talks are going good. He's very optimistic on that. I'm obviously summarizing, paraphrasing. And then he says, I absolutely have the legal right to do it, but as of right now, I don't have any intention on using my executive power to fund the border wall and open the government back up. He said, I'd rather do it through Congress. Okay, I'm going to talk about that in a minute, but those two things just relaxed everyone in the market. I mean, we're still down as of, we're a couple hours. What are we? 3 hours into trading today now? Is that right? We already 3 hours into the trading session, 3 hours in, and we're only down 60 something points on the Dow. It's been, at one point in time, it was only down 46 or 47. So it come a long way back from 225 down. The S&P, the NASDAQ have done similar. That's the only thing you can point to is Trump's comments. I guess the little bit of surprise, nothing really shocks me anymore. The little bit of surprise might be that what he said today is nothing new. What surprises me is that people jump on his comments, but he didn't say anything that he hasn't been saying for a solid week now.
Well, in fact, all the news was kind of bad. One of Apple's main suppliers said that they're down 30%. Obviously pulled Apple down, pulled the NASDAQ down. I read some other news out there on how we still might be 6 months away from a deal with China. Kind of interesting. And it was positive, saying, hey, we're getting there, but we still
I didn't see the thing about 6 months on China.
It's, Apple's below 150, and it's amazing how Apple affects things. But let's talk Ford. I own 3 Fords. How about Ford on its run? Pull that chart up.
When you started that, you said I own 3 Fords. I thought you were going to say you own some shares of Ford, and I thought you own more than 3 shares of Ford.
I own like, well, I guess I don't personally own, but throughout sprinkled it through accounts, I'm pretty sure we're like 23,000 shares. Go collar trading.
Ford is man, they are trying. I brought up a screen of Apple. I wanted to show people what you were. I can't find my little. See me scrambling search. There it is behind me.
Or from 750
Let me
back up
change.
to 9. I'm calling for 13 on a good earnings and announcement that China is getting fixed. And all I'm saying is it's getting back up to previous highs from last year. A lot of people don't understand Ford. A lot of people look at the fundamentals, and this is a good example of why they need a good education in the stock market. They look at the fundamentals and they see, oh, you know what? Did Ford? What am I trying to tell you? Ford has too much debt. Their debt to income ratio is horrible. Their risk is too high, and they forget that Ford has a Ford credit that's debt that's being paid down. In fact, it's usually in that 30% range of their total income for their company. And we're getting a little bit of feedback. Are you getting that?
Everything's good on my side.
Okay. So maybe.
It's all right. I can hear you just fine, which means it's probably recording just fine. So here's where you and I are a little bit different on Ford. Let me. I'm going to expand this out to 18 months. I had a 6-month chart on. I don't disagree with what you're saying. I disagree with your number, and that's just my opinion. This isn't something you and I are going to fight over. I know every now and then our listeners like it when we have a good fight over something, because every once in a while you come in with your opinion and it's so freaking far off the mark. It's so wrong and backwards that I have to set you straight on it. But this isn't one of those cases. We're just different on our number. I'm looking at 18 months, and Ford has not traded at $13 a share in more than 18 months. So I haven't even pushed this chart out long enough to see Ford at 13. And you're thinking that in a blink of an eye on a good earnings report this Friday, they're going to be right back on their way to 13. I think
Yep.
they've got some strong resistance to get past at $10 a share, and look at for 18 months where they tested support. They tested resistance. They got close to testing resistance. They are not pushing past $10 a share, no matter what the news is, at least not quickly. I'm not over the course of a quarter. I'm not saying they couldn't get above there, but even then, they're going to have some challenge to stall or to get past 11, 11.50, 12, even 12.50. They're not going to $13 a share this quarter. There's just not there. No matter what they report, Ford could come in and
No,
say,
I'd say we
God
probably
has,
need 6 months to get to
let me
13.
finish. Ford can come in on their report and saying, we have an official letter from God. He is buying our stock. He's buying a new Platinum F350. He loves our company. And they're still not going to $13 a share. So even an endorsement from God right now is not sending Ford up to $13 a share. Now, when you just sort of, I'm not going to say you backtracked, but you said you're thinking more in 6 months. Possibly. I would say possibly in 6 months, but that means they've got to post great numbers. They've got to crush expectations 2 quarters in a row. In the current economy, I'm just not. I hope I'm wrong. This is one of those situations, Kevin, where I hope I'm wrong, and Ford skyrockets up, and you see them trading at $13 a share sometime in the next 3 to 6 months. I genuinely hope that's the case.
It's
I own
been
Ford.
unfairly punished. It'll bounce up 15% plus with some China news.
Okay, but 15%. Think about what you just said. They're at $9 a share right now.
They'll put them up to 10.50.
That puts them at
Earnings
$10.35.
$1. That puts them 11.50. Common sense puts them up to 12.50.
Common sense. Come on. Come on. Look, I know you want to see Ford go back to 13. So do I. Ford's not going back to $13 a share unless
Pull up
they knock.
FinViz really quickly. Pull up
They've got to
FinViz.
knock it out of the park 2 quarters in a row. I think you would count it a huge victory, a huge success if on this upcoming earnings report Friday, if you see Ford get up past, I'm going to tell you 10.25. If Ford goes above 10.25, that's more than a 50. That's close to a 15% jump from where they're at right now today. Now Ford could pick up another. They could pick up 10% between now and the earnings on Friday. then they have a chance of breaking up past that 1025 resistance, and maybe they don't stall out till they're around 11 or 1125. But look, trust me, this is not a situation. This is not a conversation you and I are having where I'm going to tell you in 30 days if they're trading at $13 a share. I'm not going to come back and say, "Oh, Kevin, I was so wrong." I'm just going to say, "Man, I'm happy. I'm thrilled. I am glad I was wrong and it got to 13." I just don't think it's going to happen.
That's my number.
Okay. I
And I
hope you're
think the
right, and
little
I hope I'm
spike
wrong.
at 1250 was really like a 1288 or 1278. Can't remember exactly what that was.
Okay. 1 week prior to Ford's next earnings report in the first part of April, steak dinner if they haven't touched 13 during the quarter.
No, I want you to give me out till the end of July.
That's weak. That's weak. So you're not standing behind what you think they're going to do.
Ford just had the #1 car sales with the F Series selling over 1.1 million cars last year. I think they're trucks, but they call them automobiles.
I drive an F-150 and I love it. I love that it's a gas hog too. And all the Greenpeace, green energy people out there, I love my Ford F-150. I love the big V8 engine. I didn't even go with the EcoBoost V6 engine, which was an option. I said, screw your wussy little V6 engine. I want the V8. I want to suck more gas and put more pollutants in the air. I
Well,
make
all
no
right, there.
apologies.
Good to know. Good to
And the
know.
next truck I buy is probably going to be a 250 or 350, an F250 or F350 Ford Platinum diesel, because I'd like to put a little more pollutant in the air. I want to
I
do
just
my
want to pull a
share.
bigger trailer.
I want to do my share. I want to pull a bigger boat.
I like that idea too.
Okay.
So pretty, in all honesty, pretty slow day in the market. I think earnings really kicks off on Wednesday. No economic reports, so I think we kind of bide our time till Wednesday when some of the banks start to come
I
through,
I
and
told
all
my
the
students
races.
that you've got several big banks that report on Wednesday. You've got Bank of America. You've got, I think, Goldman reports on. I had when I was in a live class with my students earlier. Let me see if I can go back to it really quickly.
So on
I had the
Tuesday, you have
Yahoo Finance
J.P.
calendar.
Morgan. Tuesday, J.P. Morgan, Wells Fargo, Delta Airlines, United Airlines. Wednesday is Goldman Sachs, BlackRock, USB, Bank of America. And then on Thursday, Morgan Stanley. On Friday, First Horizon National.
Okay, I think you also have American Express that reports on
On
Thursday.
Thursday.
You have a whole bunch of smaller regional banks, but
KeyBank
cumulatively,
reports on Thursday, and Schwab reports on Thursday.
okay, you've also got net. Now I know it's not a bank stock. You've also got Netflix reporting on Thursday. That's one that I'm really watching close. There has been such a buildup and such a run up on Netflix. If I can change subjects on you real quick, I'm a big Netflix guy. I bought my first shares of Netflix at 25, 26 bucks a share before they ran up over $700 and did they do the 7-for-1 or the 10-for-1 split? I always forget. Remind me, did Netflix do
I
the
can't
7-for-1
remember
or the
because
10-for-1
I
split?
think Apple was 10-for-1. I'm pretty
And
sure
and,
Baidu was 10-for-1.
and Netflix did 7-for-1.
Visa
But
was
my
four
but
for
my
one.
first shares of Netflix were 26 bucks a share before they ran up to $700+ a share. Did a 7-for-1 split back down to 100 and are now back up around 330 and have been as high as 420. This is an incredible take a look at this. I know you can see this on the screen for those listeners that are doing audio only. I'm looking at a Netflix move in about 3 weeks time from 240 up to 340 briefly. I mean, 100-point move divided by being down around 240, 41% in about 3 weeks. What are they going to have to do at earnings to not give back every penny of that?
Be like Ford and just keep going higher with good news in China.
Okay, they're over $13 a share right now, so they're not just like Ford.
Yes.
They're going to have to. Here's the only problem I see with this run up that has taken place in the last 3 weeks. I think expectations are going to be hard for Netflix. I think this run up in this short a period of time, I think this run up could be a bad omen because they're going to have to come in with new subscriber numbers that crush the analysts' expectations. And analysts are always wrong. The one thing you can
Well,
count on from analysts is that they're always wrong and they're always surprised. I guess that's two things.
wouldn't you think that run up though is because of how well they did at their award show and their content? Their original content is now a premium and has some awards to back it.
Yes, but let me tell you, I do think that's what has helped the run up. But let me tell you what hurts them. All of that announcement came a week ago, right? Wasn't it a week ago today? We were talking about the big night they had at the Golden Globes a week ago Sunday, and they've had this huge run up, and the run up started a little bit before that. The problem is any new subscribers that they picked up, let me make sure I say this correctly. Any new subscribers that they picked up as a result of what happened a week ago Sunday are not going to be reflected in the numbers they report on Friday. And yet,
True. Maybe that helps out their guidance. Maybe the guidance is not, hey, we're not going to be this or that. It'll be, we picked up 100 more subscribers due to our Tony Awards and our whatever
Golden
awards
Globes.
it
They
was.
don't,
And
no Tony Awards,
go.
Golden Globes. Let's get the
Both.
Hollywood self-aggrandizing correct on whether it's Golden Globes or Oscars or Grammys or whatever. It was the Golden Globes. But anyway, look, I love Netflix stock. I own a lot of shares of Netflix stock. I'd like to see him back up in the 420 range. I'd like to see him push higher than that. It'd be phenomenal for me. But I think this strong a run up leading into earnings could spell bad news for Netflix. And I think you could see them dip a little bit on their report if they don't crush the numbers. And I think expectations have become artificially high. Now, I'm not even talking about just analyst expectations. I'm talking about what the average investor and the mutual fund managers, hedge fund managers, brokers, I'm talking about what their expectations have become in these last few weeks. And I think a number that doesn't blow out the analyst expectations could hurt them a little bit. So
let me give you a prediction. Here's my prediction. Reed Hastings comes out and says we're no longer giving out our new subscriber numbers. Going to pull a Tim Cook and see if that can't help out their stock.
It's not. It won't help out, at least short term. Look, long term it could, but here's the problem with Netflix doing that. Their revenue and their earnings per share would sink them. They are fortunate that analysts and investors focus on their new subscriber numbers, because there needs to be continued improvement at this company with the money they're spending versus the money they're bringing in. They had a number during that run up to, from their stock split price of down around 100, 120, something like that. From that stock split price up to the 420 that they peaked out at back in June and July. I think they touched 420 twice, once in June and once in July. They're bleeding money during that time. They're spending more money than they're bringing in, but people continued to buy the stock and continue to shoot them upwards because their subscriber growth was really impressive. They need those subscriber growth numbers, or their stock price is going to sink. And I'm not saying it's like the wizard behind the curtain that's fooling everybody and pulling the wool over everybody's eyes. Everyone knows about their revenue issues relative to their spending, but everyone remains optimistic that will eventually reverse. I mean, look how long Amazon spent as an unprofitable company, and yet the stock was going through the roof because people believed in the vision of Jeff Bezos. They believed in what Amazon was doing. And then finally, when Amazon reported profits, they're astronomical, crazy big profits, and they continue to generate massive revenue and grow and take over the world. Netflix has to keep those subscriber numbers there. It'd be a drastic mistake if they pulled a Tim Cook and said, we're no longer going to report subscriber growth numbers?
I was just thinking outside the box. Reed Hastings done dumber stuff.
You're just making crap up because well, not fully making crap up. You are pointing out the fact that Reed Hastings he says some stupid things once in a while. Some of these CEOs of companies are so full of themselves and buy into their own hype so much that they just come out and say some of the dumbest things, and just head scratchers for people that seemingly intelligent people that get into these very high level positions, very well paid positions, and they've got the world by its tail, and then they come out and they say some idiotic dumb comments. I mean, what's his
Hey,
name from Tesla is the king of that.
yeah, Elon Musk. Let's face it. He's my favorite idiot. Way to go, Reed.
I thought I was your favorite idiot. Oh, wait, I'm your favorite jackass. He's your favorite idiot.
No comment. No comment.
Yeah. All right. Hey, earnings is going to be fun this week. Every podcast we do, for those people that are maybe tuning into us for the first time, or if you've been listening and for the short history of us for a long time, Kevin and I have done presentations like this that have been really exclusive to our clients, his clients that he trades money for, and my students that purchase the Safe Option Strategies education. It's only been in the last few weeks that we have opened up this podcast and this video podcast to anybody who wants to jump in and join and listen in. This is going to be a fun week to be listening. This is going to be a fun week. This is the kickoff of earnings season, and we haven't done this presentation for the masses prior to this earnings season. So it's going to be fun to talk about what reports come in when Wednesday. I think Wednesday is going to be a very telling day and kind of set the tone for what's going to happen for at least the first half of earnings season. When the big tech companies start to report the last week of this month, that'll be the tell for what could be different on the second half of the earnings season, if or a perpetuation of whatever happens, good or bad, in this first couple weeks.
Definitely.
Any final comments?
Let's see. Go Saints. Sorry that the Chargers didn't beat the Pats. Kansas City's still in it. I forgot who the fourth one is. So interesting football coming up this weekend. And I will be in Vegas. So we'll see if I can't place a little wager here or there.
Okay. I'm not going to put any wagers on, and I personally don't like or follow the NFL anymore. And as long as Roger Goodell is there, I couldn't even tell you the playoff teams that are left right now. So when Roger Goodell is no longer a part of the NFL, I will consider coming back in and watching. But because of how he has botched the spouse abuse situation, the domestic abuse situation, he botched that horrifically. He botched the kneeling for the national anthem thing horrifically. Roger Goodell is worthless, in my opinion. That guy should have been fired from his position a couple of years ago. And as long as he's there, the NFL won't get 1 minute of my time or 1 penny of my money. So enjoy it. For those of you that are still with the NFL, enjoy it. I hope your team does well. For me, I'm on the sidelines of the NFL. I'm 100% college football as it relates to that sport until Roger Goodell is gone.
Think we should put an offer in for a 30-second commercial for the NFL this year, Super Bowl?
Oh yeah, absolutely. I'm sure they'll want to sponsor our podcast when I just beat the crap out of them anytime they come up. Actually, I think for all your myopic optimism on Ford, I'm thinking we should do a shameless plug for Ford. They're not a sponsor of our show, but hey, everybody, run out and buy a Ford truck. And I'll admit freely, I'm saying that in the hopes that they give me my next Ford truck. Ford, if you'll give me a Ford truck, you can sponsor my show forever. I'll make a plug for your product every single time if you'll just give me a free Ford truck.
I think Toby Keith wants to talk to you.
Okay. All right. I'm going to wrap up there. Good Monday morning. Good Monday in the markets. Even though the markets, all the indexes are down, when you consider how far down they were, if we finish at or above where we're at today, I call that a good day in the market.
It's a win.
Absolutely. All right. Have a good one, Kevin.
Hey, you take care. See you tomorrow.